Good morning and welcome to another edition of Mastermind Minutes. My name is Gary Occhiogrosso. I'm the managing partner for Franchise Growth Solutions, and you can learn all about Franchise Growth Solutions by clicking on the link above or below this webcast, depending what platform you're watching. Mastermind Minutes is designed to have one guest, one question, one expert answer in usually 10, 15 minutes, thereabouts. So we try to get you some answers in minutes, not hours. And of course, because we understand it's a bit of a tease, you can contact our guest at the end of the broadcast. We'll give you plenty of contact information. Today, my guest is a friend and associate, Michael Iannuzzi, who is a partner and co-leader in Citrin Copperman's franchise practice. They provide audit and accounting, business consulting, tax planning services, and to a wide spectrum within the franchise community, both franchisee, franchisor. He works with multi-unit franchisees. Matter of fact, we were just talking about that before the broadcast. In a variety of industries. Most of you who know me know that my sweet spot's the restaurant business, but Michael kind of is in the runs the gamut in terms of categories. So Michael, first of all, good morning and thank you for being with us today. Before I get to the question, why don't you tell us a little bit about yourself and a little bit about Citrin and the services that you offer?
Sure. And Gary, thank you so much for having me on today. I've been watching a lot of these and I think they're actually
great.
And there's a lot of information there. So you summed up the firm nicely. I'll just add a little bit to it. So, Citrin Copperman is a top 25 firm in the country. We're a tax consulting, audit firm. We have offices up and down the East Coast and out west in California. And as you mentioned, I co-chair the firm's franchise. So we do all the audits that are required for the annual franchise disclosure document renewal, a lot of tax planning, consulting. On the multi-unit side, we get very into state and local taxes, as a lot of people have units in different states, and they need help navigating all of that. And really, I just love franchising. I've been in it for the last 15 years. I loved it in college. I grew up in the restaurant business. I was making boxes at my uncle's pizzeria from the age of 9. So I've been in this business for a lot of years. Grew up seeing it, just love the people, love the interaction, and just absolutely love the franchise space. And
Great.
That's pretty much the history.
Well, that's good. I look, as I mentioned, I know you for years and years, and I always will tell my clients, my franchisor clients, that when they start building infrastructure to launch their franchise, right away they focus on sales. So they'll focus on a guy like me. All right, you're going to sell franchises. Well,
Right,
okay,
right.
hold on now. Let's maybe what you want to do is get your financial advisors in place, whether that's an accounting firm or an in-house CFO. I think franchisors very often kind of rush to let's sell franchises. We'll figure out the rest later on. And then you guys are given the information for the audit, and you go, well, what's this? So the question today, and I know it's on a lot of folks' mind, and a lot of my clients have asked about it, because I don't want to use the term tripwires in the whole CARE Act and the PPP, but sometimes, I certainly feel like, wow, it's like there's things in there. So with franchisors and franchisees all focused on PPP funding and the potential forgiveness, what are some of the pure federal tax changes that were included in the stimulus bill that, perhaps franchisees and franchisors and just entrepreneurs, people who have independent business,
Sure.
What are they overlooking? What should they be maybe focused on?
Sure. Yeah. So, you mentioned PPP and that fund. So everybody, I think at this point, knows what's going on with the PPP funds, and it still today changes, on a daily basis. So, I do want to cover some of the tax changes that are tax return based as opposed to, lending based, which is what the SBA and the PPP funds are. So there's a couple of different things I want to cover, and I'm going to do a little bit of reading because some of this stuff is technical, and I want to try to make sure we hit the main points. So the first one that was passed way back was the employee retention tax credit. Now, what I want people to realize is if you already have PPP funding, you cannot take this credit. So it's one or the other. So for those that maybe are still thinking about taking PPP money right now, they may want to think about this instead, depending on how it works. So the employee retention credit is a tax credit for employers equal to 50% of qualified wages that eligible employers pay their employees. This retention credit applies to qualified wages paid after March 12, 2020, and all the way through January 1st, 21. So you still have a lot of runway on this. The maximum amount of the qualified wages that you can claim are $10,000, and you get a credit up to $5,000. So throughout the year, if you are in this bucket and you did not take PPP money and you qualify for the credit, and I'll go into some of the qualifications, you can get a credit up to $5,000 per employee. The way this works is this is claimed on your payroll tax returns. So assuming you meet the qualifications, and this is something that you want to do, you should be speaking with your payroll provider on how to code these employees, because when they file your payroll tax returns, this credit will be generated on that return, and it'll be cash immediately right back in your pocket. So eligible employers, and this is important, you are either fully or partially suspended during the calendar quarter 2020 from orders from a government, or because you were in certain industries, travel, group meetings, things like that. Or you experienced a significant decline in sales. And they're defining that decline in sales as 50% for the same quarter compared to the prior year. And this qualification stays in effect until you get back to 80% of where you are now. So this is certainly something to look into and to think about if you did not receive PPP funding, and you won't be receiving PPP funding.
Well, Michael, just to clarify a little bit, because my eyes glaze over
I know,
at this sort of stuff.
I get it.
Okay,
I get it.
but first of all, it sounds like whoever is, maybe a bell went off in their head. The first thing they should do is call you, and short of that, call their accountant. But it would appear to me that some math has to be done first to see what the better option is, because it sounds like, since it's only one or the other, based on this, you'd want to find out, like, do I get more money if I, do what you just said, or if I take the PPP? Am I understanding that correctly?
Yeah, that's basically it. And, one of the advantages here is that with PPP, there's a big forgiveness calculation. And you and I were just talking before we came on that there's some proposed changes to that right now. And maybe they could be more beneficial changes if those pass. We're not sure. But the retention credit is pretty simple, because if you are in these buckets, you speak to your payroll provider, they run it right through your payroll tax return, and you're done. There's no application. And the application for forgiveness came out on Friday, May 15th. The SBA, released an 11-page document. So
Right.
There's a lot to navigate. I know it's very challenging because you're trying to make decisions today when things are changing every day.
Yeah, absolutely. And in the restaurant business, we are seeing some light at the end of the tunnel. And it's not a flashlight or a moving train. So that's all good. Well, as I always state, these mastermind minutes are designed to be just that, minutes with a quick overview and an expert answer to a question. So I'm sure there are a lot of folks who are watching who would like to know more about this.
Sure.
Michael, how can they get in touch with you? Phone number, website, email address, what's the best way? And we do post it when we amplify this on social media.
Sure. And so my email address is miannuzzi, miannuzzi at citrincopperman.com. And you could also connect with me on LinkedIn. I post a lot of content there, contact information, and a lot of content as well. And Gary, if we have another minute or two, I could touch on a couple other things here that I think affect maybe some of your audience and the people that you deal with in the restaurant.
Go right ahead.
Cool. So the next few that were buried, so the employee retention credit was one. That is a payroll tax credit like we discussed. Some of these other ones are pure tax return changes. So what do I mean by that? You file a federal tax return, and these are changes that could increase your loss or reduce your income based on these changes. So for the multi-unit operators out there that are building restaurants, building gyms, things like that, there was a correction was made with the CARES Act that rolled back some of the changes made with the Trump tax bill a couple of years ago. So what I mean by that, everybody maybe knows the term qualified leasehold improvements. So when you build a restaurant, if you didn't categorize your build out correctly and you dumped everything into leasehold improvements, the new law that was passed a few years ago said you can only depreciate those over 39 years. So if you spent $100,000, you had to take 39 years to write that off. With the new CARES Act, a correction was made where you can now expense 100% of that upfront. So if you spent 100 grand and you take $100,000 bonus depreciation, you've now either created a loss or reduced your income by $100,000. Very, very big changes with this. And this also rolls into losses that were generated. Also under the new law that passed a few years ago, the amount of losses you can take were limited. The CARES Act also eliminated those losses as well. And now you can roll back these losses to old years. So what does that mean? If you're in a position right now that you need cash and you're able to take advantage of the leasehold improvement depreciation change, and now you have a loss, you can look at your personal tax return and your business return and say, I paid taxes in 2015. I want to take that loss and roll it back to there. And now I can file for a refund, and the IRS will refund the taxes you paid in 2015 today. So it's another way to put cash in the business owner's pocket. And this needs to be looked at to see how far back you have to go, or should you go forward with these losses?
Well, let me say this. I'm glad you kind of continued with the answer, because I was under the impression there might be one pure tax change, but it sounds like, and again, it just kind of underscores what I said earlier. A restaurateur, an entrepreneur, a retailer, a business owner, they need to have someone like you, or they need to have conversation. This, by the way, the what you had just explained does not tie into whether you took PPP or not. There's no
Great. No,
relationship, right?
completely independent. Just
Okay.
return
Yes.
filing method. Yeah.
So again, look, as I said, my eyes glaze over with
Yep.
this stuff, but
Yep.
it's important. It's key. You know, liquidity is king. People need cash right now. So again, just quickly repeat your email address. But again,
Sure.
for those of you who
Sure.
can't write it all down, it'll be posted, and this'll, you'll see it up on LinkedIn and the other social platforms.
Sure.
Michael,
So it's
please.
Iannuzzi, Miannuzzi at citrincopperman.com. And also please, connect with me on LinkedIn. I accept a lot of those invites and we post a lot of content there as well. And
Great.
thank you so much for this. This was great.
No, thank you. I mean, again, these are things that people don't know or don't understand, and unless it's brought to their attention, I tell folks all the time, your accountant and your attorney, to a great extent, are only as good as the issues you bring to them. If you're not aware of these things, they don't know you need them. So,
Right.
I mean, I know you
Right.
and your firm are very, very proactive. So I can't emphasize enough to the audience, these are critical things. These are things that can help put cash in your pocket while you're trying to, navigate through the entire pandemic. And an operation like Citrin Copperman and a person like Michael can really be helpful. Michael, thank you again. And I hope to see you again, like live, maybe
Yes. Yes.
in person.
Same here, Gary. Same
Thank you.
here.
Be well. Bye-bye.
Thank you, Gary. Take it easy. Bye.